Good evening, everyone. Time for another silver update. Now, this is the daily chart of silver provided by netdania.com. You can click on the link below. And I've drawn in a number of trend lines here. Primary trend line starting back in 2012 is this top one here that comes down to about 23 bucks. So you can see it's going to take a big rally in silver to break that trend line. Next one actually comes all the way down to 16, and you can see them rounding off here. Now we're at 1460. We had a dip down that took us down to not to the lowest, but testing the lows. The lowest we actually have ever had is in the 13s of late. Now that's the paper price. We still have a bear market, a rounding down bear market in the price of paper silver. We do not have a bear market in the price of physical silver, specifically junk silver. And that's what I want to talk about tonight is this silver cycle. Now, the silver cycle is extremely important because this is the way that silver gets back into the system. This is the way that silver gets recycled. It works through your local coin shops, your sellers like ATMEX and Gainesville, and your everyday collectors and everybody in the country. The system cycles through the existing junk silver and the scrap. And so before we look at the junk silver, I want to take a look at the scrap. Now, the reason why is because when we look at this Silver Institute chart here, the world silver supply and demand, there's some important line items we want to look at here. The first is, of course, mine production. Everybody has been talking about that. Mine production has continued to rise since here 2005. It's gone up from 639 to about 877, so we're talking about a 25% increase in silver mine production. Now, the total supply has not risen anywhere near that. You can see 955 to 1061. So the question is, what makes up the difference? Well, the difference is made up of net government sales, scrap, and net hedging. Now, the first thing we want to note here is that net government sales is basically nothing. The governments don't have any silver anymore. That's out of the equation, and that's out of the equation for good. They're not buying it like they buy gold. It's not something they cycle through where central banks go on a net increase of their buying or a net decrease in their buying or their net selling. That doesn't happen with silver. Silver was basically disgorged by the governments of the world, and around the time 2006 when the SLV came online, that's when the governments were done. Now this tiny amount that we have here in net government sales, I don't put too much stock in it. I'm not sure where it came from, but you can see it was 2006 pretty much when the decline started. Now the other line that we're going to be looking at here that's really important is this scrap figure. Now you can see that the scrap figure peaked in 2011. That makes sense. When silver was up around 50 bucks, there were a lot of people digging around through their attics looking for silver candlesticks or silver plate sets, silver sterling sets, whatever they could find that was made of silver, they could go and get 50 bucks an ounce for it. And it followed through, of course, till through 2012. But then we have this drop off, and you can see we're down to 168 on last year. Now my prediction is for 2015, there's actually going to be a precipitous drop off in this figure. Now the other line is net hedging, and that's just nonsense, so we're not going to pay attention to that. It has to do with futures and things like that. It's just a fake number anyway. So the bottom line is that we're running a silver deficit. We're only mining 877, but we're consuming 1066. There's a 200 million ounce silver deficit, and that's based on last year. Now, before we get to the silver cycle, let's take a look at this scrap issue. This article here is actually a very good article on the stebgo.com blog, and it's called Understanding Silver Scrap, Part 1, 2, and 3. I encourage you to read all three of these, and it's very educational. You have to understand with silver scrap, and I'm not talking about the 90% coins. We're going to get to that, although that is included in scrap, or traditionally has been included in scrap, and I'll explain to you why that's the case. But with these things like silverware sets and various all kinds of antiques and things like that, you have different ways of rating it. You have fine silver, sterling silver, and then there's coin silver, European flatware, and you have a different group of hallmarks here, and the different hallmarks tell you the purity. So it's pretty complex. If you're one of those people who goes to the flea markets or estate sales or all these things where you might be able to pick this stuff up, you have to know what you're doing, or you're going to pay too much for the silver, and then you're not going to be able to make a profit when you go in and try to recycle it. Now, the thing I want you to take away from this more than anything else is just looking at this picture. It tells you the age of this stuff. None of this stuff is new. There isn't anything here, maybe these little cups here or something, but everything else here clearly is antique. And that's very important, because that tells you that even though the price of silver is so low, they're really not making this anymore. People don't buy silverware sets that are made of silver. And of course, we already know the reason why silverware is made of silver is because of the incredible antimicrobial factor with silver that's different than any other metal. It kills bacteria. So yes, having silverware is very important for your health, but people don't have that kind of money anymore, even though silver is that cheap. That's why you see all of this stuff that's being recycled as scrap is very, very old. Now, why is that important? That's important because eventually it's going to run out. There's only so much of it out there. And you saw the surge that happened in 2011 with the price of silver at $50. With the price of silver all the way down in the 14s, there isn't going to be much of this coming in. Now, let's segue over to the 90% bags, because that's going to be the big issue. Now, one of the things I check all the time is the pricing on comparesilverprices.com for the bags. And Andy Hoffman has pointed out, Chris Duane, a lot of people are talking about the big jump in premiums now in the 90% silver. So let's start off and look at the bags here at Gainesville Coins. You can see that these are 90% silver coin bags. It's $1,000 in face. I've explained this in the past. The way that you figure this out is that you have 715 ounces of silver in every $1,000 face bag. Now that's really important, because as opposed to the silver flatware and silver scrap that comes from all of these antiques and silverware sets, these can vary in so many ways in purity. And so what happens is you have to have a tremendous amount of knowledge to be able to calculate the value of what you have. With 90% junk silver, it's not at all the case. You can actually add up the face value of the money. And if you have $1,000 in face, and that doesn't matter. Now the nickel, war nickels, are going to be an exception. But if you're talking about dimes and quarters and half dollars, don't count the silver dollars in there, because they actually have more than 90%. But if you're just talking about the dimes, quarters, and half dollars junk silver, then you can just add up the value of the money that you have, and that will tell you how many ounces of silver you have. So if you have $1,000 face, then you know you have roughly, give or take, 715 ounces of silver. Or if it's a 100-ounce bag, you have 71.5. Now, I did a check here on Gainesville to see how many of these they had. I added $9.99 to my cart, and they said that the maximum limit was 100. I don't know if that's what they actually have in stock, or if that's just some limitation that they put on it. I really don't know. But the key thing to take away here is that they're asking $6.29 over spot for these junk bags. So maybe they have a source. That's a fantastic profit. If they're getting them for spot, you can see they're making a fortune. If they're getting them for $3 over spot, they're making a fortune. But let's go over to APMEX here and take a look at their junk silver page. Now they are actually out. You can see their 90% silver coins are on alert status here, all the way down to you can still get the $50 bag. So for the $50 bag, you're talking about half of 71 or 35 ounces. So if we do the math, I'll just let you figure the math out there. Now, the important takeaway I wanted you to see from this is this figure right here. This is the APMEX buy price, $12,219 for a $1,000 face bag. That's going to be the really important number, and I'm going to show you why. If we bring out the calculator here, we'll take our number of 12,219 divided by the 715 ounces in the 1,000 face bag, and there's your price, $17. This means that APMEX is buying junk silver for $17. That is $2.40 above spot. Now you have to remember, you're always going to have people complain to you. I'll use eBay as an example. People will always complain about, yeah, that's what it's selling for, but what are people buying it for? And that's why when you're on eBay, you want to make sure you're logged into my eBay, and you want to make sure you set it for completed. Although now they've changed the listing. I just clicked auction, but you could do all listings or you can do auction. And this is going to show you what is listed. Now, the main thing you're going to want to look for on eBay is the green. So you can see here, here's a completed auction. Completed auctions are in green. This is from September 6th. And that was a buy it now, but you can find ones that have, if you want to just show an auction that has bidders as opposed to someone who paid for it at the buy it now price, you can choose this auction. So you can see here that this bag of dimes, I think it was, no, it's dimes, quarters, it's junk silver basically. You can see we had this price of $14,250. So on eBay we had $14,250, and that's 1,000 ounce or $1,000 face bag, so that's divided by 715, and you can see that that went for $19.93. Now that's quite a bit above the APMEX buy price, but I want to concentrate on that APMEX buy price because I want you to think about the silver cycle. That's the most important thing that we can talk about here, because the way the silver cycle works is that traditionally your coin stores that you have in your city are going to be buyers of the junk silver. They buy silver from people walking in the door, and they quote them a price based on spot. They will actually go and check the spot price and then quote you a price based on spot. Now, for the last 30, 40 years, that price at a local coin store would always be a percentage below spot. The reason why that is because if you think about it, some guy comes in with a shoebox full of old coins. The first thing they're going to do is sort the coins and find out which of these coins are going to be 90% silver coins. The ones that are 90% silver coins, they can just take them and stick them in a pile, and those are going to be easy to deal with. The rest of the coins, if they're numismatic or if they're copper or whatever, it's going to be a nightmare to deal with them, and they're going to have to pay a pittance for those numismatic coins to try to make any kind of profit. And the reason is because there just aren't that many people walking into the store and buying coins. There aren't that many coin collectors. Now, with the 90% silver coins, that's a really easy deal for them, because what they do is they put those all in a pile, they add up the value of them, and then they tell the person, okay, spot price is this. I'm going to give you $1 below spot. Here's how much money I'm going to give you for these coins. Now, what happens to those coins when they do that? Well, the problem with junk silver is that they're not going to put this in their display case. They're not going to separate out the halves from the quarters and the dimes and try to grade them and look at their dates and do things like that. One of the reasons why is because there aren't that many valuable numismatic dates in those coins. The other reason is because most of those coins are in such poor condition because of the use, there really is no numismatic value. So they're just going to throw them into a pile, get the face value, get the spot price, determine how much below spot they're going to pay, and then the most important step is the next step, which is when they send it off to the refiner, because that's what happens to these coins. They pay a price below spot, and then when they have enough of them, they send them to the refiner. The refiner pays them spot or near spot, and then the refiner melts them down, and they go back out as recycled silver. And that's what shows up in this scrap figure. Now, why is that so important? The reason why that is so important is because with APMEX paying $17 an ounce for junk silver, which is $2.60 above the spot price, that means that the silver cycle is broken. That means that the silver is not coming in anymore to be melted down and sent to the refiners. That means that this number of scrap will begin to approach zero. But it also means that there is such demand for junk silver that it is not coming in as fast as it's going out. So this silver cycle, this cycle where coins come into the local coin store, they're given a price that's below spot. It has to be below spot because they don't sell it as junk. They sell it as scrap. It gets melted down. It gets sent back in. It ends up on the COMEX. This cycle is now broken. This is very important because I've been watching silver since the late 90s. And this is the first time that I can recall where this silver cycle has been broken, where they're bidding for spot a number of bidding for junk a number of dollars above spot. That means that none of that silver is going to be recycled anymore. And that means that we're going to be running into a serious shortage. And we'll talk to you next time.